I'm David Gonzalez, owner of Devco Financial and Insurance Services in San Francisco, and today I'm going to be reviewing your service retirement if you're a government employee with the City and County of San Francisco. Now, the figures up here are based upon your age and years of service, and with that, that will determine how old you'll be when you're first eligible for service retirement. Now, the example I put up here today shows a person age 35 with 5 years of service. Now, based upon that information, this individual will first be eligible for service retirement at age 50. Now, that sounds pretty good, doesn't it? Age 50, wow, I can retire. Well, you can retire if you've made some provisions and some planning for yourself in advance, because between age 50 and who knows how further on down the line what shape and form Social Security will be in at that time, and how old you'll have to be when you're first eligible for it. That could be a long, long span of time. And not only that, is that take a look here at the figures that by the time this person is age 50, they're only eligible for 20% of their hourly wage. Now, if you're a transit operator with the San Francisco Municipal Railway, that does not include your run pay or any RDOs you might be picking up. That is strictly based on your hourly wage. So 20% of your hourly wage means that you're walking away from 80% of your income, plus the difference between that and your run pay and any RDOs you may be picking up as well. So based on today's contract, today being the year 2012, that equates out to a monthly retirement income of only $1,000 a month. And look at how many years before Social Security comes into play, not knowing what that's going to look like as well. So, what this tells everyone is that you need to do something on your own to supplement your income. Okay? Now, one of the things available to you is the Deferred Compensation Program through Gov't. It used to be ING, used to be Aetna, that used to be Hartford. Different companies have come in and administered the program, but currently it's Gov't. And the Deferred Compensation Program is under the Section 457 Tax Revenue Act of 1978. Now, what that stipulates is that state and municipal, that's you, employees prohibited from using the 401k plan. Now, you've heard of 401k plans, and that is not something that you're eligible for as a municipal government employee. Now, what this act states is that assets, your money, cannot be held in a trust account. Now, what does that mean? That means that the money, your money again, belongs to the employer, in this case the City and County of San Francisco. Now, further down the road, what implications does that have? Well, in the year 1994, Orange County filed bankruptcy. Also closer to home, the city of Vallejo did the same thing in the year 2008. Now, what that meant was that the creditors that had accounts that were owed money upon by the employer, which in that case was Orange County, they were able to line up and get their bills paid through the 457 accounts of the employees of Orange County who were putting money into that account. Why? Again, can't be held in a trust account, and the money belongs to the employer, so any assets that the employer has and there are creditors involved, the creditor's going to go get those assets, aren't they? So people who are aware of this, some of them say, okay, I can live with it because of the tax deferral. But some say, well, I'm not too comfortable with it. Those who are not aware of this have a real, talk about the rock and a hard place, that's a real tough decision to arrive at to get that tax qualified program. Well, something else that is available to you is something that I brought to City and County in San Francisco several years ago. And that is, it's a tax-deferred interest-bearing annuity with a minimum guaranteed interest rate of 3%. Minimum guaranteed interest rate means just that. It can never go any lower than 3%. That's the bottom line. It is currently paying 4%. So what that means is that because it's a tax-deferred interest-bearing account, tax-deferred means that at the end of the year you do not receive a 1099 from this company. It is truly tax-deferred. So that 4% interest rate is a true 4%. You're not paying any taxes or reporting it to the IRS. That means your money builds faster, compounds on a daily basis, built upon that current interest rate. And by the way, that current interest rate could go higher, but it can never go any lower than that 3%. Now, these are different times we live in. And with that in mind, people who have savings types of accounts, normally speaking, like to get to that account and get their money should they need it in case of emergency. Well, in this case, there are withdrawals available. You can either make withdrawals online or by an 800 number. Now, what I suggest people do that are first approved for this program is to go online, register your own personal identification number, and then also let them know where you do your banking. So in that case, should further down the road you need to withdraw money from that particular account, you can do so online and not have to worry about the United States Postal Service. Plus the fact, and this is the part I like, there are no fees or charges for any withdrawals made. Let me repeat that. There are no fees or charges for any withdrawals made on this particular account. So, do yourself a favor, fill in the your contact information, that is, in the box below, so that way I can get in touch with you, or you can call me. And that way, again, I can put together some numbers that are particular to your particular situation. Okay? Does that make sense? Good. I look forward to hearing from you soon.